Hi, everyone. Yvette here from Carrillo Group CNY.
And I'm Robert Carrillo.
Welcome to our August monthly market report.
We've got a major update for you around mortgage rates. If you haven't heard, they've dropped significantly since the start of the year. So we're discussing what that means for the housing market as we move through August and into the fall.
As usual, remember that real estate is local. We take the national news and put it to the side, and we study the data locally and put that to the side. Then we compare our market to the national market. Then we share that info with you. So what's up with mortgage rates?
The recent decrease happened after the Federal Reserve's meeting on July 31st, where they decided to maintain the target rate for the Fed funds rate between 5.25% and 5.5%. That is not the mortgage rate, though. It's just a federal thing that has an impact on the economy and, in turn, the housing market.
Right. The Fed's actions and the anticipation of what they'll do next are driving some of the changes we're seeing. As Mark Zandi pointed out, the Fed is likely to cut rates in September, and this expectation is already affecting the market. We're seeing stocks up and bond yields down, which is good news for mortgage rates.
The possibility of the Fed cutting rates twice, maybe even 3 times this year, is creating a different economic atmosphere. Mortgage rates have already declined to their lowest levels since February, and this drop is a good thing for potential home buyers, although affordability challenges remain. The median home price in San Bernardino, for example, is $500,000, and that's low compared to surrounding cities.
And speaking of affordability, the unemployment rate has ticked up slightly to 4.3% in July, putting housing out of reach for more people. This increase, along with the Fed's likely rate cuts, is contributing to the decline in mortgage rates. Lawrence Yun mentioned that mortgage rates are plunging due to weak job growth and rising unemployment.
So what does this mean for you? Well, as of today, per Freddie Mac, the average 30-year fixed mortgage rate is around 6.4%, which is down from over 7.5% earlier this year. This drop is good news for affordability. For example, if you were looking to borrow $500,000 in April, your monthly payment would have been $3,500, give or take. Today, at 6.4%, that payment drops to a little over $3,100. That's a savings of about $400 per month.
That's a significant difference, especially for those who are on the fence about buying. If you're able, now is a good time to buy your first home here in San Bernardino and throughout the Inland Empire. If you wait for rates to drop more, chances are you will face more competition from other buyers, and that means even higher prices. Lawrence Yu noted that there's a large pent-up demand that could be released into the market as conditions improve.
To your first point, Yvette, home values keep appreciating, especially here, 6% since January in San Bernardino. To your second point, inventory is up by about 15%, which means buyers have more choices, something we haven't seen in the last couple of years. Doug Duncan said this by saying that more homeowners are deciding they can't delay moving any longer. So we're seeing the beginnings of what could be a turning point in the market.
And while we're not predicting a sudden rush of buyers, it's clear that more people will start making decisions as the market evolves. Greg McBride at Bankrate reminds us that even though interest rates might not drop back to 3%, we could see them settle around 5.5% to 6% over the next year, which is still much better than what we've seen recently.
Real estate today, throughout the country, but especially here, is a strong bet to continue appreciating. In Southern California, the next 4 years, as we gear up for the 2028 Olympics, right? We just got done with that. It'll be a very interesting time. For us, it's all about staying informed and providing that information to you. So whether you're thinking about buying, selling, or just watching the market, we're here to guide you.
Well, that's a wrap. Thanks for joining us for the August monthly market report. If you have any real estate questions, do not hesitate to contact us. Details are in the description below.
To the next update, take care.